Good morning. We are December 6th for the week. We closed down 3 cents in corn. Actually, look at the big losses here. Soybeans down 32 cents for the week. Actually, Chicago Board of Trade wheat down the same as corn, 3 cents. Minneapolis down 5. The big mover here was soybeans. Not hearing any big sales this week, and soybeans tumbled down. Of course, soybeans went up a lot farther and a lot faster than the other grains as well. Live cattle up $9.30. Big recovery in the cattle this week. Feeder cattle up $15.07 in the Jan contract. Gold down $12 and silver the opposite direction up a dollar, 1.89, actually a dollar 89. Pretty big move in silver, about 3.5%. So what gives on these markets? You look at the technicals here. Corn basically treading water this week, down 3 cents for the week, and holding that uptrend. You holding that uptrend here, maybe getting down close to that trend line, and maybe that's where the market can rally again. Soybeans, a different looking animal. Many people point out this potential left shoulder, head, right shoulder, and now we violated the neckline, expecting soybeans to come down, and maybe they will come down and test this 1086 level in the January contract. That it would probably be a good time to get long soybeans. We made some sales, I think it was here at like 1105. So certainly we get down here to 1086. I would consider buying it mainly because this soybean uptrend is holding. I mean, you actually could hold the soybean uptrend down here even if you drop down to like 1050 or so. But boy, the other issue is if you're China and you have an obligation to buy a lot of soybeans, where do you target buying it? You got to buy 400 million more bushels. Do you buy it here at 1086, or do you hope that it'll go down even further into this trend line? Maybe they'll try and buy it at the 1050 mark. But either way, some people point out this gap, but you have China sitting there in the background. Will you fill the gap? We have China sitting there in the background with the need to buy quite a bit of U.S. soybeans in the short term. Of course, that's why we had this runaway $1.50 rally in the bean market in a month. But maybe the slowdown is exactly what they were looking for. The wheat market, much more negative technical picture. I mean, maybe we bottomed the market here. We do have a higher recent highs, and this is a higher low if we hold it. But you could come down and make a double bottom in wheat, especially if soybeans has a lot of weakness. And the Minneapolis wheat is even more negative, I guess. This might be the bottom, but look at here, we're just treading water. That's maybe a good sign of a bottom. We've spent 4 or 5 months in this range between 570 and $6. And the other markets, live cattle making a huge recovery after we think topping out this at this area, dropping sharply, and then recovering almost 50% of that loss. Maybe that's a good place to sell the market. In the feeder cattle, similar formation, got up here to 380 or so, a little higher in that Jan contract, dropped down to $300. We have gained now just about back to the 340 area. So you have a 50% retracement in the feeder cattle. And look at this straight up move we've made lately. Recoveries usually, I mean, we had a big decline of 380 down to 300 boy, that's $80 divided by 380. I mean, that's basically more than 20%. And we have recovered half of that. That is actually a very, very volatile market. Other markets that showed type of topping action after running to new historic highs. Gold ran up here to 44 plus, broke down to a 39 or so. And actually, this does not look like a top because you've actually treaded water too much. You've had some decent strength lately. And here we are. This looks like this potential top turned into a pennant formation. And pennant formations are usually continuation formations. That would be continuation of the uptrend. And if you doubt that at all, you need to look at its sister metal, silver. Silver potential top, but rallied back to those old highs, went back a third time testing, and triple tops rarely work. We have new recent highs in silver, and that certainly supports that gold potentially will run to new highs as well. Wow, that is big time news, because gold has already doubled in the past year and a half from previous all-time historic 6,000 year highs. You know, in comparison to what cattle, gold, and silver have done, historic new 6,000 year highs, if we did the same thing, went back to our old high in soybeans and then doubled it, our old high is $18 plus. That would be the equivalent of $36 soybeans, you know, equivalent of what gold and silver and cattle have actually done. I guess it'd be a little less. Cattle haven't quite doubled those previous highs, but wow, you start thinking about the potential for grains where we're at relatively historic lows. That is pretty exciting. Crude oil starting to see some strength in this past week, pushing up, and maybe we should have been buying this $56 potential low a month ago, but certainly crude oil is finding strength. Is that tied to progress in the Ukraine war? Maybe, but actually the Ukraine war continues to rage. Ukraine, the guy who supposedly ran the country, Yermak, the guy that was Zelensky's top guy, is out. He had to resign, basically was fired because of some corruption scandals, which Ukraine is rife with it. So Ukraine is trying to negotiate peace. Of course, the U.S. and Russia are negotiating with Ukraine. Interesting situation. Europe basically is almost out of the talks, but of course they've been sabotaging them. They really want war. But of course, whatever you want to think about the Ukraine war, it looks like it's winding down. They're trying to negotiate peace, working on it. That could be an important thing, because the United States fell out of favor with all of the BRICS-related countries in trade. China is one of them. India is one of them. That's half the world's population. And those two major countries represent a huge potential market. Well, it is a huge market in China, but you know, that is the future for ag commodity demand out of the U.S. And U.S. producers are just very good ag producers. We really produce more than we need, and we need to export it. So interesting developments. Grains pausing here. Actually, soybeans losing the most this week. Grains look like they're standing still compared to cattle, gold, and silver, and some of these outside markets. But maybe this is the winter calm before the storm. Certainly, there could be a lot of fireworks ahead for grains if they were to do the historic things that gold, silver, cattle have done in the past year and a half. Hope you have a great weekend and good marketing.